Hi, crew. Welcome to Andy Makes Sense of It. I'm Andy. Today, we're going to make sense of second quarter 2026 earnings release from Home Depot, Lowe's, and the online bookseller. Can't even say their name. We'll get into that more in a second. Hey, I'm retired from Home Depot. I used to do this when I was there. I'm going to continue to do it in my retirement. And along the way, you're going to learn some stuff. And I really hope that by the end of this, you're going to say, man, I'm glad that I watched that. I learned something I didn't know before. You will be a customer for life and you'll keep coming back time and time again. At least that's what I'm hoping. All right. So it's a tradition. I'm wearing the money tie. Let's get to it. All right. So, Home Depot, your second quarter 2026 revenue was the highest quarterly revenue in company history. Yes, that is awesome. It was $2.6 billion above last year, which is a 5.7% increase. So good on you. What was the number? The number was $47,861,000,000. That's $47,000,000,000. That is awesome. All right, so earnings. You guys know earnings is my favorite number. It's the third highest second quarter earnings in company history. It was $215 million above last year. It was a 4.1% increase, not too shabby. So you guys ended up putting $4,766,000,000 in the bank for second quarter. That is awesome. Hey, let's take a look at revenue since 2015. So we take a look at revenue over 2015. We've got a nice stair step there until we get to the pandemic year of 2021, where 2020, when people were just buying stuff like crazy. So there's a big step there and some smaller steps and some downward steps or maybe some flat steps. But now look, we're back on an upward trajectory with that nice stair step increase. That means the company is healthy, healthy, healthy. Good on you. And you're like, Andy, these numbers, I hear what you're saying. The 47,000 million thing, I know it's a lot of money. What does it mean? So, what I'd like to do is compare the first half, not first quarter, but first half revenue for Home Depot, which was $89,600,000,000. So, $89.6 billion just by itself, if we compare to these companies' entire 2025. Home Depot would be number 47 on the Fortune 500 list, be number 40 by itself just with half a year in the past. A little bit below J&J and Pepsi, a little bit above Boeing, UPS, and Federal Express. It is awesome. Holy cow, are you kidding? Another perspective slide. This one makes me giggle. Home Depot, there's that $89.6 billion number. The other blue people had for the entire 2025 86.3. So already halfway through the year, you did more than what they did last year. It's like Mr. McPhail said, at this point, Home Depot, at this point, Lowe's is just a place to steal share. All right. And hey, guys, please don't ever, ever, ever forget that you matter and what you do matters. So it doesn't matter what part of the organization you work in. Doesn't matter where you do that work. If you're in a store, you're in a distribution center, you're at the SSC, you're at home. But it does matter how you do that work. So please be the best doer you can be. You're part of a team that absolutely crushes it. You matter. And you're like, Andy, how do you know? How could you possibly know? And I know because we just went over those numbers. They don't make themselves. You help make it happen. All right, let's get right into it. So, earnings release mid-August for Home Depot. I know a lot of words on here. I'm sorry. I'm not going to read it to you. You can read. But this is what the company tells Wall Street and shareholders. Hey, this is what we think is going to happen in 2026. This is our guidance that we're giving you. And the really cool thing about what happened at the second quarter release was Mr. McPhail said, we're reaffirming what we told you at the beginning of the year We're confident in our estimates. What we said previously is what we think is still going to happen. Nothing is going on that would affect how we think we'll do for this entire year. Wall Street loves that. As an investor, I love that. As a shareholder, I love that. You should love that too. The other people, well, they had an update. And what they updated was all of this. Street doesn't like it when companies revise their guidance. It's good that the company's reacting to whatever is going on, but then questions start to swirl around. How is your ability to forecast your business? And if you can't do that, how do you run your business? And what they did when they gave their initial guidance was they gave a range. For instance, total sales 92 to 94, and now they're saying you're probably going to be closer to the lower number 92. So when we do these reviews, we really will look at 4 financial measures. We look at revenue, also known as sales. So revenue includes sales, but that's not all it is. Revenue is online and store sales, the big, the stuff that we are all familiar with. Hey, you go to a store, you buy something, that's part of revenue. Remember the subsidiaries that Home Depot has purchased and Lowe's has purchased over the past however many years. That income is included in here. That revenue is included here. There's all kinds of fees that are included here. Anything that brings in cash is a form of revenue. So when we talk about revenue, that's what we're talking about. We're also going to talk about comparable store sales, which is also known as comps. And what that means is we're comparing sales for stores that are open in 2025 and 2026. If they were, so the new store, not open in 25, but is open in 26, we're not including that in comparable sales. And then the inverse is true as well. If a store got closed in 26, we don't count that either. We do that because that is a measure of a company's health based on the assets that they currently had and they had last year. I mean, you can imagine if you had one store and you opened 10 stores, hopefully you would increase your revenue by tenfold. But I want to know how that one store did. Did that one store deal still do as well? And when we're talking a chain of over 2,000 stores, it becomes more interesting to know how those stores are doing year over year. Hence the term comps and comparable store sales. We're also going to look at earnings. You guys know that's my favorite number. Earnings is literally profit. So that's the revenue dollars that we talked about before, minus all of your expenses. How much money did you make? How much money did you make? Not what did you sell? What did you make as a company? How are you returning money back to your investors? And how are you returning money back to the company? So I came up with something a while back called SWAT it. And SWAT it stands for sell something for more than you paid for it while covering costs associated with selling it. Include extra dollars, take it to the bank, invest in your company, talent, reward them. Kind of the ABCs of business or business 101. So the last thing we're going to take a peek at is earnings per share, also known as EPS. That's literally, the definition is in its name. Earnings dollars divided by the number of shares that are available in the company. So for example, Home Depot, 2Q 2026 earnings per share calculation looks like that. 4.766 billion divided by the number of shares that are outstanding is $4.92 a share. We'll get into more of that in a second, but those are the 4 things that we're going to take a peek at. All right, so this is similar to the chart that we looked at before, but it also includes the blue people, and it only goes back to 2022. So we're continuing that upward momentum that we talked about. We got those stair steps going back in another positive direction. And it's always important that we be able to compare last year to this year to last year and say, oof, we're doing better. But even more importantly, as the street is concerned, they are very concerned about expectations. The street will say, we expect this company to sell this much stuff and report this EPS on their earnings release date. So we had those revenues of $47,861,000,000. Bing, we beat top line expectations from Wall Street because their expectation was $47.5 billion. So bing, beat it. We get a big green check mark. That is awesome. The other people, they had an expectation of 26.2 billion and they came at 25.9, so they missed expectations. And it's called, in the case of revenue, missing or beating top line expectations. And the reason it's the top line is it's because it's the top line of a profit and loss statement. Here's the revenue. It's just the very first line that you come to. We started looking at revenue quarter over quarter, not just second quarter, a couple of years ago when I was doing these. And this is revenue by quarter back to Q1 of 2022. And I put some trend lines in there. I'm glad that I have my money invested in the orange one and I have nothing to do with the blue one. I know where I'd rather be. All right, let's talk about comp store sales. These are comps that we talked about before. This is total comp store sales. Why is it low? Oh, that's right. They're not in the international markets anymore. They got out of Canada and they got out of Mexico years ago. But what this is for Home Depot, there's 1.7% increase in comp store sales, and that's US, Canada, Mexico. Canada, Mexico doing a great job, along with the US, Home Depot doing a great job. So then let's take a look at the comps for just the United States. That's where our blue people come in. 1.3% increase in comp store sales. That's awesome. 0.2% increase, not awesome. Earnings, these are the dollars. You know, it's my favorite number. Man, here it's good. Feels good to get out of the red. The last time we saw an increase in net earnings in Q2 was in 2022. 4.7% increase is awesome. But look at the blue people, 0.04. I had to increase the decimal or it would have said 00. I think that's worth a deep dive. Remember, they increased their revenue, but still missed expectations. So what I got here for you is a baseline of Home Depot on the left side there of 2025. That was the revenue, and that's the green. The black is earnings. So that's a baseline. So let's take a peek at 2026. So we take a peek at 2026. The 2026 revenue was up 5.7%. Yay, we just talked about that. That's awesome. So the net earnings were up 4.7%. That makes sense, right? I'm selling more and I'm making more than I did the previous year. All right, so let's go take a peek at the blue, folks. That's baseline 2025, where I got revenue, I got earnings. But then if I go take a look at what we just talked about with revenue and earnings for the blue people, in 2026, we said revenue is up 8.3%. Net earnings is up 0.04%. So Lowe's ended up doing $2 billion worth of stuff. They sold $2 billion worth of stuff, but only increased their net profit by $1 million. That's a lot of work to sell that much stuff, and you made no extra cash for that. Glad I'm not a Lowe's shareholder. All right, one more earnings related slide, and then we'll move on to earnings per share. So on the left side in the blue, you've got their Lowe's entire 2025 earnings by quarter. Totaled $6.654 billion is what they put in the bank for the entire year 2025. Home Depot, just in the first half of 26, $8.055 billion. Boom! Took 6 months to do what they did in more than 12. That is awesome. All right. Earnings per share. Remember, that's that number divided by the number of shares, and that's where that comes from. There's lots of fluctuation that are in here. And also for EPS, comparing to Wall Street expectation is more important than comparing to previous year. So even though Home Depot increased and Lowe's was flat versus last year, the important part is that both companies beat expectations. This is known as beating or missing bottom line expectations. And the reason it's the bottom line is because it's the bottom line of the profit and loss statement is where that comes from. So one of the very interesting things about this that I discovered as I was going through the Lowe's release and listening to their earnings call was that they took all of their um, tariff rebates and sunk it into earnings per share. So the impact of that was 11 cents per share. Without that extra boost, they would have missed EPS expectations. And instead of seeing a green arrow there, you would in a green check mark, it would have been a red mist. So I want to unpack that for a second. So let's make fun. It's funny. Let's make sense of the tariff refunds. So Home Depot said, hey, we had $730 million. We treated it as a COGS reduction. What's COGS? COGS is cost of goods sold. So that means whatever you pay to your supplier for that good, plus the freight, plus duties, plus discounts and prep costs, everything it took to get from the manufacturing facility onto the store floor and available for sale. You've often heard people say, well, what's the landed cost? That's also known as landed cost. So it boosted the gross margin by 145 basis points. It's used to offset some other cost inflation and inflates the gross margin, and it has an indirect effect on EPS. Lowe's, on the other hand, $80 million, a one-time income item, added 11 cents to EPS, offset by fuel transportation costs, no effect on gross margin for them. And it was a direct impact on EPS. It's just my humble opinion that Home Depot used the more elegant method of using their tariff refund than did Lowe's. All right, so let's take a peek at some of the selected sales data that we normally look at. And for me, I'm really interested in the number of customer transactions, second quarter last year versus second quarter this year, and the average ticket. What does the average of those transactions, the consumers, how much did they pay? So slightly fewer customers spent a little less. So $3.6 million less transactions, but the average ticket was up $2.49. So maybe not as healthy as we'd like to be, still healthy nonetheless. All right, let's take a peek at the online bookseller versus Home Depot and Lowe's. And you guys know that profit is my favorite number. So what I like to do is I compare revenue, remember everything that comes in, to net earnings. After you've paid all the bills and paid all the rent and everything else, what's left at the end of the day? And what Home Depot had left at the end of the day was $4.7 billion. That's a 10% return for Q2. Lowe's, they had 2.3, almost $2.4 billion left over. That's a 9.2% return. Pretty healthy. But my goodness, you come over here. All right, so the online bookseller had their first $200 billion, that's right, first $200 billion quarter, which was a 20% gain versus last year. Yeah, growing like leaps and bounds. So the 10 and the 9.2% return it's respectable. But holy cow, 31.2%, 62.6, almost $62.7 billion. I had questions about that, so I dug into it so we could make sense of it. So their second quarter 2026 income includes non-operating tax, pre-tax, other income of $53.4 billion, primarily from our investments in Anthropic. Okay, what does that mean? So I dug into that so we could make sense of it. So it's a lot of words on here, but pretty much what this says is, hey, Amazon owns a large chunk of Anthropic. Anthropic's valuation went through the roof. Accounting rules say, hey, Amazon, you have to tell your investors that what the value is of that stake each quarter, especially when there's an increase like this. So the increase in valuation becomes income on paper, even though Amazon didn't sell anything and they didn't receive cash. So what the 53.4 billion was for, it's an entirely unrealized gain. It's a paper increase in the value of Amazon's investment. It was not a payment from Anthropic. It was not revenue. It wasn't AWS income. It wasn't cash flow of any kind. It did inflate Amazon's reported net income for the quarter, but it didn't affect operations, so it had to be there. So that's where that came from. When I first saw that, I'm like, holy cow, how did that happen? So after we made sense of that, let's go back and take a peek at this, what I did. So there's Home Depot. We got 10% return. We got Lowe's with the 9.2% return. And then if we go in and we take out that one-time estimate, with that one-time accounting thing, and we estimate, we got to take some tax out of that, some other stuff. We're going to estimate it's like a $20 billion number, which is about 10%. So, okay, we're right back where we should be. So this is without the Anthropic other income. So then you guys know what I've been doing in the past is I've been taking their segments, their North America sales, splitting them off, their international sales, splitting that off, and their online, their AWS. What is that? AWS is the average web services. Awful web services. I think that's what it is. It's awful average. I don't remember which one, but that's what that stands for. And I try to break down the profitability. Excuse me, but with that weird Anthropic thing, I'm not even going to attempt it. So there's Home Depot's revenue versus earnings, then Lowe's, and then we had the 116 just for North American sales. Then we had 42 for just international sales. And then AWS is now catching up and surpassing international sales just by itself. That AWS thing saw an increased revenue of 36.7% versus last year. 36.7% versus last year. That's an incredible thing. All right, so I'm done. But I would be remiss if we didn't talk a little bit about this. Ted's out. We wish him luck. Good luck. Looking forward to your return. Richard and Anne-Marie did a fabulous job on the earnings call. Things are going great. Keep the pedal to the metal. Keep things going great. And hey, that's it. We did a little survey, and it turns out that everybody's unimpressed by these. So that's the thing that I guess I got to work on and do something about. Anyhow, subscribe, keep an eye out for more future things that maybe aren't Q2, Q3 quarterly related. We'll make sense of more things at that time when we do that. So I'll see you next time. Bye-bye.